Welcome to the Recon Trader. In today's video, I will share with you some technical analysis in an attempt to determine Bitcoin's next move, and that next move will determine my next trade. So let's get right into the weeds. And we will start over here on the Bitcoin USDT weekly candle chart for Binance Exchange. And right now, the bulls have really stepped up on this current weekly candle and have pushed this price up above the 50% Fibonacci retracement level of right around 47,000. And this is a key level of support that we did see previously back here for Bitcoin on this move up. And if the bulls can close this weekly candle above the 50% Fibonacci level, they have a day and about 6 hours to go before this candle closes. That would be a nice bullish move for Bitcoin's price after this recent sell-off down to around the 618 level of the Fibonacci retracement, where we have seen multiple levels of support. And so what I will be keeping an eye on as far as the weekly chart is obviously holding above this 50% Fibonacci level and a further push above the 382 level, which is 51,000, represented by this yellow line where we kind of rejected from previously. And if we can, of course, get above that level, then we also break through this downward trend line that could then signal a move higher up into, say, the 60,000 level or even all-time new highs. And so right now we've had a nice bullish move, albeit on some declining volume. However, that declining volume a lot of times leads to a breakout in one direction or the other. So we will continue to monitor the weekly chart, but let's jump over to the daily chart. And on the daily chart, on this particular candle that broke down below the ribbons, was an entry for one of my more recent trades on the short side. This is a bearish signal anytime a candle closes below these ribbons, especially in the fashion that it did. And I picked up a short and I was able to capture about a 41% profit. Nothing huge, but it was still a profit nonetheless on a short position. Most elite traders try to make money on both long and short positions. You're leaving money on the table if you're not shorting. However, with that being said, if you're not comfortable shorting Bitcoin, don't do it. But for me, this was a clear signal to get short, and it paid off. And then Bitcoin did find some support around the 41,000 level, bounced up, got rejected again from the ribbons, so this could have been another short opportunity. However, I was still in my short because I was looking for this to go a little lower. And then when it came down into this level, I put on a trailing stop loss, and when it bounced back up out of this region is when I got stopped out on the trailing stop loss. Again, for a nice profit. And then I was watching the price chop along this 41,000 level, and I was actually prepared to go short again if Bitcoin would have closed below the 41,000 level. However, that didn't happen. As you can see, the bulls stepped up and started to push the price back towards the ribbons. And in my last video, it was on this candle here where we were coming right into the ribbon, and I had noted how the short-term EMA had crossed down to the bottom of the ribbons, and that was very bearish again. And so I was keeping a close eye on the possibility of a retracement and another short opportunity. But once again, the bulls continued to step up, and if you look down here at the volume, you can see the volume was increasing, and so that is a bullish signal, and they were able to push this price up above the ribbons, and not just above the ribbons, but they also got the price above the green line you see here, which again is that 50% Fibonacci retracement level of around $47,000, and they got a close pretty well above it. However, they did run into this prior resistance, and you can see even back in here there's prior resistance up around that 48 to 49,000 level, and ran into it, and it so far has put a stall on this push up. However, the bulls could simply be just taking a breather for their next leg up. And so what I will be watching here is if we get a retracement down and then perhaps a bounce up, that could certainly be an opportunity to go long and see if this price can't continue up to, say, around the 52 or 53,000 level, which would be another level of resistance, but it is above the 382 level of the Fibonacci retracement tool, which is around 51,000. So I would be looking for perhaps an entry around 48.8 or 49,000 with a profit target up here around 51,000 to 53,000 depending on price action. Now, with that all being said, on the flip side, if the price action actually comes down and breaches below the 50% level of the Fibonacci retracement and maybe even gets down below the ribbons, and so I would be interested in a short position with either the breach of the 50% level or the ribbons, and at that point be looking for the price to seek out this 41,000 as a possible profit target, or even breach down to where I thought we might go previously, and that was around the 36.5 level. And so the daily candles are a shorter time frame to set up a trade on than the 1 week candles. However, I'm going to jump over to the 4-hour candles, and as I pointed out in the last video, a breach of this longer trend line coming down from the 52,000 mark down through this bump up. If we were able to breach above this, I would open a long, and I did open a long and was able to capture a pretty nice profit. I actually sold off when the price came back down into the 50% level and captured some profit there. I wish I could be the hero and say I took profit up here at the top, but that's just not the reality. I don't look for tops or bottoms for entries or exits. I look for the best opportunity with the least amount of risk. So once this price started to retrace into the 50% level, I locked in my win for a nice profit. And in all fairness, in that video, I also said if we rejected from this level, I would be looking to enter a short position if the price was able to break down below the 618 level. And if it broke down below that 618 level, then I would look for a sell-off back into the 41,000 to the 40,750 level, where we have seen previous support on multiple occasions throughout this current price action. Now, going forward after this big move up, we can see that this move ran out of steam right around this previous resistance level, and that previous resistance level we can see on other time frames, and that is kind of why I look at longer time frames and the shorter time frame. If I see consistency on those time frames, that type of consistency carries a lot more weight as far as these particular levels. And so my next trade opportunity would be what I call the high and tight pattern, and the high and tight pattern is based on a big move like we saw, and then the price action trades sideways a little higher than the actual move itself, and that's what we're doing. We're trading higher than this full move. And so the upper level of this pattern that I would look to be breached would be up around our previous resistance, which is around 48.8. And then my lower level is going to be the Fibonacci 50% level, which you have heard me mention in the other two charts. It's still a valid level. We see support back here, and once that support got breached, then we saw the big sell-off. We see support again, and if perhaps we see it get breached, then we'd see another big sell-off down here into the 618 level, which would be a decent profit on a short position. And so the first trade that I would be looking for is if we get a close and the candle has to close below this level, much like it did here. You would want to wait for the close. Yes, you give up some profit, but you get confirmation that this is more than likely going to go in your direction. And so I would look for a close below the 50%, and I'll get short. Now, as far as my stop loss and take profit on that particular move, I can tell you that my risk versus reward will be a minimum 1 to 2, if not a 1 to 3. And so for a hypothetical, if, for instance, the price sold off into, say, 46,000, I entered my trade, my profit level would be down here around the 618 level, which would give me a 7% profit, and then my stop loss would be just above the 50% Fibonacci level, which would be a 2% loss. And that would definitely give me a 1 to 3 risk versus reward. And at that point, I only have to be right 25% of the time to break even. And any percentage higher than 25%, I'm actually profitable. And so that would be a favorable risk versus reward trade. Now, on the flip side, if this price action is able to push up above the 48.8 level, then I would be looking at the opportunity to go long. And then my stop loss obviously would be just below that 48.8 level, where there is the possibility of prior resistance turning into future support. And then as far as profit goes, if we zoom out, I would be checking my 6 for prior resistance, and that would be back here around 53,000. Or you could look at the 51,000 level where it did present some resistance, and that yellow line is the 382 Fibonacci retracement, so you might look to take some profit at that level in case we don't get the push through up to the 53,000. I would probably be more than likely targeting that 53,000 level. And so with a hypothetical entry of, say, around 49,000, that would put my profit at around that 7% again. And then my stop loss would actually be down around bottom of where we started moving sideways here on these candles, and that'd be around 3%. And so that would give me a 1 to 2 risk versus reward ratio. Not as good as the 1 to 3 on the short side, but with a 1 to 2 risk versus reward ratio. Again, I only have to be right about 33% of the time to break even, and anything above that and I'm profitable, and that is still a favorable opportunity. And so right now I'm just waiting for this high and tight trade to play out. It is either going to break down and I'll get short, or it'll break up and I'll get long. Either way, I'll do an update video, so now would be a good time to shoot that subscribe button so you don't miss out on future videos. If you like this video, do me a favor, spike a like. If you have questions or comments, drop those in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.